All right. Good morning, everyone. I'm Vince Lansing, and this is the Gold Fix Morning Market Rundown. It's 7:44 in the AM on Thursday before Memorial Day weekend. Hoping you have a good one in advance. Let's get started. There's the front page. You see a lovely picture of Eddie Murphy and his Shanghai princess buying all the gold and silver. And the rest of the stories we mentioned before. Today, we're going to talk about the BRICS de-dollarization. We're going to have an update on that, right? We're going to do a little signpost for you. The BRICS, and more specifically, the Saudis' de-dollarization, bigly, headed into the 2025, their 2025 summit. And as a corollary, now we know why Trump went to visit Saudi Arabia to cut that deal that he did, as excellent as it was. But let's start with the markets first. There are four charts up there. Top right-hand side, that's gold. Top left-hand side, that's platinum. Lower left-hand side, that's Bitcoin. And lower right-hand side, that's silver. We're going to comment on the silver chart today. 10-year yields are 461 up 1. The dollar is 99.70 up 4. S&P 500 is 583 down 2. VIX is 21.09 up 23. Gold is 3,300 even, down 15. Silver 32.71 down 64. Notable, those two markets are lower now, but they were higher on the open last night, suggesting Shanghai bought and someone else sold. We'll see. Copper 455 down almost 5 cents. WTI 61 and change down 72. Natural gas 331 down 3/4 of a percentage point. Bitcoin bucking that trend at a 110,000 spot 700 up 1,000. Palladium down 4 and change. Platinum down 9. And grains are all offered with wheat down the most. Take a look at that board. And not having looked at every country's data last night, something happened economically likely that made people think a recession was near and everything got sold. I'm not sure. We'll figure it out. We'll figure it out at some point today. Our story or our topic for today. In March, foreign investors were net buyers of long-term U.S. securities, according to Goldman Sachs's valuation adjusted interpretation of preliminary U.S. Treasury data, also known as TIC data. The inflows were concentrated in U.S. Treasuries, equities, and corporate bonds, while agency securities continued to see outflows. That chart there you're looking at, it's a breakdown of every nation and the money they put into treasuries. Goldman attributes the selling of agencies primarily to official institutions, whereas private investors drove demand across treasuries, stocks, and credit. Notably, Norway reversed course from being one of February's largest net sellers to becoming March's top buyer of long-term treasuries. Interesting. The United Kingdom followed closely as the second largest purchaser. In contrast, mainland China led the selling activity, though Goldman notes that accounting for custodial bias suggests somewhat smaller net U.S. Treasury selling by mainland China. It's a recurring technical adjustment, but there's more to it than that, I think, technically speaking. The data further highlights two phenomena. The first phenomena is that Europe was a net buyer of long-term U.S. assets during the month. So this kind of should drive another stake in the heart of the whole everyone is de-dollarizing. The G7 are de-dollarizing. Europe is panicking. Asia and Latin America continue to sell. Now, China was the biggest seller. Japan also sold. But the recent selling has been biggest coming out of Saudi Arabia for the last year. See that chart there? The right-hand side of that chart, that's Saudi Arabia selling. And the left-hand side of that chart is the Euro area buying. Now, they only sold a little bit in that last dot you're looking at there, Saudi Arabians. Europe bought significantly last month. Canada did as well. So we'd like to offer a comment about that. The behavior of the Saudis determine presidential policy decisions, not the legacy media and banking propaganda that we're telling everyone Europe was selling. You could see also that Trump's visit to the Saudis was warranted, as any smart negotiator conveys what they're capable of before coming to the table. Never give back in negotiation what you've already won in war, kinetic or otherwise. Now, there are more charts going nation by nation in premium at the bottom. It's actually very interesting. Comment on top of the comment. If you know that Saudi Arabia is selling and Trump goes to sit with them, well, then there's a negotiation going on. If you know that Brazil is selling, and by the way, they are selling, they're also steeply declining. If you know that Brazil is selling and Trump's not talking to them, well, we're basically giving them the finger and saying, we don't care. We'll find someone else to buy them. So it's a matter of who's an important customer and who's not an important customer. And we view the Saudis as important, and they view us as important. But the de-dollarization continues. Regionally, it's the Latin American countries and the Far East, including Japan. So the BRICS are still puking treasuries. But it's become a little bit more orderly recently. Mind you, their summit is coming up. So the de-dollarization is part and parcel of that. And we'll talk a little bit more about that in some of the posts that are coming out today. Again, there's more at the bottom on that. Coming today, busy day today for posts. Yesterday was a light day. Last night, or the other night, last night too, Shanghai fund traders returned. We're going to break down why this matters according to region, Shanghai versus the US, Shanghai now versus Shanghai, say, a year ago, and Shanghai as a proxy for the event that the BRICS are coming up with. We believe China will spend even more than expected to stimulate demand and to preserve government. When they spend it may be the problem. It should be better for them to spend it now rather than later, but we're not so sure about that. They really have a big problem with their social safety net, believe it or not, and they must do something to fix that on top of encouraging their people to buy things in order to keep their government policy stable. Again, echoing what David Stockman said, we read a post, a story, a narrative, a report by him, and it really just kind of put a dagger in it for us. You know, you're on the edge, and the edge was, are they serious about cuts? And let's assume that they are. Benefit of the doubt, a serious, and then at the end, they're elected officials. Now, Trump may not be running for election again, but everyone else is. So to cut Medicare and Medicaid and other things related to that entitlement program policy entails losing votes. And that's why Trump came out and said, I'm not cutting Medicaid, nothing meaningful. He was signaling to his congressmen and the people voting for this bill that, hey, I'm not going to screw with your reelection. And he's letting their constituency because he's very influential. Yesterday, well, we'll talk about that in a second. So for founders, we will share why China's central bank resumed gold buying when it did. And we'll also share that with premium as well. It's gold. It's gold. We have to talk about it with you guys, right? I mean, that's what you're here for. And we're going to share that with you as well. But we want to get our notes together. Some poor recording quality issues. Anyway, that will all come out later today, as well as another special end of the week preview for founders. Data on deck for today is, it's a busy day. 8:30 is initial jobless. 9:45 is flash PMI for services manufacturing. Those are very important economic, not the most important, but they're very important economic indicators to determine where things are going at the wholesale and manufacturing level. Are they spending more on things? Do they expect to have to fill the pipeline? And there's some good inflation indicators in that as well. So I think it should be closely watched. 10 a.m. is existing home sales. That'll probably be very closely watched. And 2 p.m. we have some Fed employee talking. John Williams is not a minor person, though. Yesterday's posts were very light. Found a special comment that China sets the gold and silver ratio live. LBMA bullion bank disaster averted. That's open to all. We would recommend you listen to that if you're trying to put some framework around what actually happened in London when they added 60 and added 90 days, and why it's important now, since they came out and said something about it. There you go. So to summarize, before we get into the charts again, the world was a net buyer of U.S. Treasuries last month. And Europe was a net buyer. Within the nations, the G7 is buying net and the BRICS are selling. Within Europe, despite their protest that the dollar is going to go to zero, within Europe, you see that the institutions were selling a little bit, but by and far, there were more buyers at the private and pension level than there were at the institutional level outside of pensions. Net, the bottom line is Europe's not selling. There are no signs of it currently. You can take it for what it's worth. Gold is down 5 and change to the right. If you look at that chart and you're looking at it through my lens, well, this is what I said, what I hoped, what I thought would happen, and that is gold breaks this line and it goes there. So we have officially a fish hook now. The question is, do you buy this dip or not? And I don't really see why you wouldn't buy this dip. That line there, even though it's important for me, it really isn't an important line. This could be a healthy pullback. Let's see how it closes. Silver, on the other hand, the day's not over yet, but this is concerning for me. And I'll see if I can show you why right now. These yellow Bollinger Bands, that's where my level was. Get short below here and get long above there. Well, I got long yesterday above there. I got longer. I got longer gold and I added some silver. I put some speculative silver on. And that's not supposed to happen. So 4 out of 5 times it doesn't happen, but when it happens, you do not ignore it. So that's not supposed to happen. All it implies is that unless we close on the highs today, the market is going to stay in that range. That's all it really implies, but we're not sure yet. I want to draw your attention to Bitcoin for a second here. We've seen this pattern before in gold. Mind you, it's a weekly chart, but what we have is the potential for a measured move. Yeah, the market makes some serious highs here in the past due to the ETF buying, right? And then the market sold off. And now we have, on a weekly chart, a relatively V-shaped bottom. And you have a differential. We have a depth of this and depth to distance. If we're in a bullish market, this market should add a total of 26,000 to this price, this line here, and put it at about 130,000. So we're trading 110 right now. If you're a speculator, you would be encouraged, not by me, but someone would encourage you, I'm sure, to risk 10,000 if it trades 100, you're out, to make 20,000. So that's a 2-to-1 bet. And it's certainly something to look at. These work when you're already in a bull market. The question is, are we in a bull market? And you want to say yes, obviously, but you want to look for drivers. And for me, the driver here was the ETF buying. For here, the driver is corporate America is buying treasuries and buying Bitcoin with it. And that's what's going on now. And this is all in response to the changes in law. And I think we have some wind beneath our Bitcoin wings, so to speak. That's it. I'm Vince. Have a great day. I will see you tomorrow.